Yeah, so we were just we'll get all of this covered, but it's pretty man, I mean, we're just look at that. Look at that candlestick. Woof.
I mean, I was watching on the in kind of the 0D space, like watching the 5 and 15 minute, Alex, and I usually don't see the market do this on a Monday, let alone
Yeah.
like any day. But this market was very determined for a good like
Yeah.
30 to 40 point pop this morning, plus the gap higher. So I do have some guardrails on for the morning. I'm looking to see if price will stay below 63.30 or 63.35. I'm gonna try to like hedge my way through the day if I need to. But that's kind of my call side ceiling for the day is like probably not seeing price go too much higher than like 63.35 or 63.40. I'll see if that is respected or not.
Yeah, near like today's high 63.35. So
Yep.
yeah, I have a feeling we'll get a little bit of sell off in the afternoon. I mean, this is kind of what has been happening. You go up and you just kind of peter out, and it comes back and right into that that expected range.
Yep.
So
Exactly.
I think it's going to probably. I mean, I wouldn't be surprised if we finish about 63.20 today, around
Um,
roundabouts, maybe even a little lower.
I'd be very happy with that. So would everyone in my daily profit play room.
Yeah, yeah, nice,
Yep.
nice,
So
nice.
we'll see how it plays out. I mean we did get through a operation cycle or OPEX last week, so monthly expiration. It wasn't a big one. It was really like heavily call skewed, and I'm surprised that the market kind of melting up into that didn't really have more of a waiver today. But also what's kind of in tried and true fashion is I'm curious, Alex, how the rest of the week behaves. We do have some earnings this week that I'd like to talk about. I think that
Sure. Yep.
I'm still in the same camp. Like, last week, even on Friday, the market did respect that 6,300 resistance I was talking about. So we're 30 points above it. But do we actually stay there for the week? Do we go higher for the week? Um, I just think that maybe this market is like so keen on a melt up right into that like FOMC non-farm payroll August 1st trade deadline. Like maybe that's like the big kind of seasonal pivot. And maybe I'm speculating, maybe it means nothing, but part of me thinks that the market's going to have any type of normal reality check, just having a bit of a 3 to 5% correction. I think we have one between like this kind of August September window.
Yeah, yeah, we're gonna talk more about like what can be expected as we head into this last couple weeks of July.
Yep.
I mean, look at that vertical cliff face though. Pretty crazy, man.
Yeah.
So I thought it was, last week we had basically utilities ripped last week. Yeah, and technology. And technology is a broad one. Like, what does that mean, right? We had companies like ASTS ripping. We had Apple not doing much, but utilities are something I'm pretty bullish on long term. Like companies like the Southern company you can see here. I actually kind of wanted to take this trade today, but I didn't have time. I took another one. But uh, breaking out over all-time highs. And I believe they're an electricity provider, right?
Yeah.
So this is utilities, AI. It's kind of like a downstream play from that. And you have let me see some other ones. You have CEG. So I'm looking at this. I'm looking to see Constellation Energy.
Hmm.
Um, I'm seeing a pretty good setup. I feel we're getting a nice consolidation descending volume here. Setting up over the EMAs. I think if we can break through this 330 32 mark, uh, we could go. We could at least test 341. Maybe almost 350. Uh, but we'll see. They are leading today. Utilities you can see here. Right over here. Utilities are looking pretty solid today. NEE is another one I've been watching. Uh, you know, it's good. It was kind of sell. Yeah, broke out again. I was watching it. I took an Apple trade and a Qubits trade today instead this morning. So I
Nice.
can only manage so many of them, but I'm trying to get this profit panel going. But yeah, so these are all breaking out, right? NEE is pretty interesting. I mean, we've broken out here on NEE over this resistance line. I could see us going, back to $79, $80, at least back here, $79 to $80 range. Um,
Alex, do you think with utilities leading like this? I mean, I'm looking at year-to-date performance. We have tech. So right now, top down would be your best performing sector of 2025 is industrials, 14.95%. Now, to be fair, industrials are heavily weighted towards defense and aerospace. So GE Aerospace, RTX.
those
Um,
count as industrials. Yeah.
yeah, it's like I mean, Uber is industrials for crying out loud, which I wouldn't say
Really?
that's yeah, it's really weird to see Uber is in there, but it's like you take GE Aerospace, RTX, Caterpillar, Boeing, all these are 20+%. GE Vernova is up 75% for the year.
Yeah.
It's like so you've had some big pops in those top like 5 or 6 weighted industrials, which is what's leading that sector. But it's an interesting mix of like what is leading the market this year. Healthcare is the lowest performing sector at negative 4.17, so healthcare is still down. Negative 0.97 is consumer discretionary. Utilities have been steady. Industrials have been
So
steady. Financials have been steady. Technology has made a big comeback because of the resiliency. But like you've got double digits on industrials, tech, utilities, and the market's up, 7% year to date. But it's not a typical like
pretty
big bull
solid
market.
mix, man.
Yeah,
Honestly.
it's an interesting mix, and I don't know if this is like classified as healthy, broader bull market, or if this is a bit of sector rotation into some of those like, I mean, it's funny because like a utilities play is really not a high beta, but it's up 10.65% with like more defensive, more dividend driven stocks.
Right.
Industrials, aerospace has been ripping like crazy. And yes, we have Middle East conflict and hotspots. Russia, Ukraine still going strong. I don't know other than maybe it's just the reality of Trump and the fact that um I don't know, we're kind of still in that bully space of the world of like, yeah, we'll stick our nose in Israel and pack or is it why am I forgetting? It's not
Israel,
pa Pal
Iran, the Middle East,
Palestine, right?
Gaza, Palestine, all
Yeah.
those
So
places.
the stickles nose in the Middle East, is it an energy play for us? Is it just are we trying to be peacekeepers and say ceasefire, but Russia Ukraine's not stopping? But the aerospace has been a big spot, but it's so heavily weighted towards like the top performers, top performers, top performers. So I do wonder this year if the market is just it's concentrated, at the top with the very few stocks are leading the broader market, but enough so that it doesn't matter. I mean, if we have enough diversification where it's not all Mag 7, I mean, if utilities wants to lead the way and energy leads the way, or it's fine. It's just a weird bull market to think that all the stuff that's made money the last 10 years is not the same as making money right now.
Yeah, I mean, Rao. Sorry if I'm mispronouncing your name there. Yeah, I mean, risk on plays into stocks involved in global conflicts, which, uh, you know, the thing is though, Boeing is not, I don't think it's typically a risk on play. Like these defense
No,
companies, these utility plays are not risk on. Like
no,
normally you see the risk on companies are like it would be which is also
they're defensives.
stored today. IonQ, right, is a risk on play.
Yeah.
Uh, but these are soaring. The Kratos is soaring. The can't type, but can't type again. But yeah, it just it's weird. Everything's it does seem pretty broad market. I mean, maybe this is a good sign. Until the breaths, I don't know how, I don't know if there's ever any warning signs when a bull market is going to return, or a bear market's going to return, or a bull market's going to end. It's like, does the breadth decrease, right? Does you start running on the vapors of just the biggest companies, at
Right.
least in or one or the biggest sectors, right? I don't know.
Hmm.
It's pretty crazy. I mean, look at this. Look at this cliff face though. Just there's nothing. There's hardly any red
I
on
know.
this company like this. I mean, this thing has just been popping.
So I'll ask you, do you see a stock like that and a chart like that and you get excited to still participate at those highs, or are you looking at ways to are you waiting for dips? Are you trying to be patient for pullbacks? Are you waiting for or do you just go like more short term, like, hey, let's let it consolidate, find something structurally in the shorter time frames and then see if you can get some breakout love. Like I'm
So
just curious what your plan is on a chart that looks like that.
yeah, well, I'm curious to hear yours too. I mean, on this one, I I wouldn't trade this unless we had like a flag pattern or something form. A little
Yeah.
bit. I want a little bit of something, So, if we're going up here, I want a little bit of something, either we're staying flat for a couple periods or we're coming down a little bit, right? And then, you see the volume consolidation. You see some good support forming on a floor, so maybe, around here, you see it kind of bouncing up around there. And then if it were to break over, the previous short-term highs, like, would be in this case 61 or 61.22 or so, like then I'd be looking to go, because like I think if you're looking, I mean, you can do the pullback continuation trends, and there are
Right.
stocks that are doing that. I mean, there's plenty of them, um, but like there is a lot of opportunity. Everything seems to just be going like this, going up. So it's like
Hmm.
I don't know. What would you do?
I mean, I need a pullback, man. I can't look at I can't look at a stock like that and get excited about the highs unless I was going to do something risk defined with some structure. Like a flag pattern would be great. Let's say from around 60, let's say we pull back to like $55 and it's like a little bit of a base at 55. Maybe I
Yeah.
do a credit spread, or if I want no assignment risk, maybe I just do like a debit spread and do like a 55 by 56 and just try to play something like that where it's like, all right, it's risk defined. I'll take a stab at it, ride this momentum.
Yeah.
And structure a trade and a strategy that fits like the chart. I mean, I just look at it like I can't justify buying a stock that looks like that in a chart. I just feel like a pullback is coming, something inevitable. We see those like pockets with that volume profile. It's like we could pocket back to like $50 if it pulls back. You
Oh
know?
yeah, for sure. I wouldn't actually buy this and put it in my portfolio.
Yeah.
We'd be playing, yeah. I mean, that's the hard part is like you're either going all these really big cap. I mean, Kratos it's a large cap, I think. Mid cap, maybe it's a mid cap. I mean, but it's
Hmm.
a very well entrenched company. It's not going anywhere.
Right.
But the same way, it's like um you could go, yeah, you can go buy Soundhounds over here and put it in your long-term portfolio. But like, I mean, to me, companies like SoundHound aren't necessarily long-term buy and hold. I like to buy and hold. Uh, I like to trade these, but I like to long-term buy and hold. A little more. SoundHound has like no customers really.
Right.
I don't know. So it's just like, or no revenue. But when you go to Kratos or Boeing, it's like when do you get into the or Meta? It's like, yeah, it's a hard thing, right? It's a hard thing to like add to the short term portfolio, but then also trying to find those trading opportunities. Like that's what I would do. I would just look for you know consolidation, a little bit of consolidation. My point is a lot of these tickers are going higher and they're not really pulling back. And so
Right.
you're missing out on a lot of potential, short-term or mid-term trade opportunities just by trying to figure out when these things are going to pull back. And it will happen, I guess. I'm just not
It
sure.
will. It's just such a weird environment where it's like the market, and I hate to say like, oh, the market's complacent. The market, it's like but it's not. It's like if it was complacent, then we'd already have pullbacks. But it's like, we're starting to see like extreme greed in the sentiment swings. We've gone from like the extreme bearish sentiment to now like more neutral to more bullish. The CNN Fear and Greed Index is showing extreme greed. We have earnings right now, and it's like, look, if we got through basically the first like July 9th tariff pause, which I think that tariff it's built up probably more so than what it actually is like going to affect the overall economy. I think that the surprise and the shock factor was there. It still matters, like August 1st still matters, but honestly, I mean, we went from Trump fighting against Musk. Now Trump is just trolling Powell, and the Fed at least has a say with a press conference on the 30th. Um, and inflation readings weren't great last week. CPI, PPI both came in hotter. I'm looking at earnings this week. It's kind of interesting. We've got some defensive plays with Lockheed Martin. We've got Coca-Cola. We got home builders with DR Horton. Tesla and Google are up
Ooh.
this week on Wednesday, so those are pretty big earnings. Legacy tech like IBM, Chipotle is an oldie but a goodie, but since they did that big split, it's actually pretty affordable to. I have a bunch of ratio spreads and naked puts on Chipotle. Alaska Airlines. I mean, we have United Airlines, I think this week, American Airlines this week, Alaska Airlines, Intel, another legacy tech that has had pretty nice pop. I've been in Intel since like low 20s. It's trading for like $23, $24. So
Yeah.
there's a nice little mix this week, and then most Mag 7 is next week. So your Apple, Amazon, Meta, Microsoft, I think are all next week. That'd be like Wednesday, Thursday. So like this week, next week, key earnings. Fed on Wednesday the 30th. Non-farm payroll squeezing on the first, plus the tariff deadline in the first. Seasonality wise, the markets use July as like a pretty bullish month. If you look at from the April low, a monthly chart of the SPX is insane. because it's just a giant candle wick to the downside and all the way back up. April closed like 1 to 1.15% down. And then
Yeah.
May was a rip, June was a rip. July is now just proving to be like more of the melt up.
Well, this is the 10th year in a row July has been bullish.
It's not over yet.
Yeah, that's
It's
true.
probably but I think it's going to be like a further melt up into the end of the month. I mean, end of the month is FOMC on Thursday, end of the month on or Wednesday's FOMC, Thursday's end of the month at 31st. But I don't think we're going to give back. What are we up this month, Alex? Like 4 or 5% for the month?
6187 to 60, something like that. Yeah.
Okay.
That's a
So if we're I mean, I don't think we give that all back at the very end of the month. I could see like August being that like ventilation where the market has maybe a pause or maybe a pullback. Um, but I mean, look at the support. You can go into you can use that monthly chart. Look at all those wicks at like 6150.
yeah.
That to me is like any pullback to like 6150, any pullback to 6000 is pretty well supported on dips. Um, I don't think this is like an '08 fake out. I think the market, we have bear markets typically every 4 years. We had a legitimate bear market in 2022, and the market took 9 months to work itself out of a 20 to 30% drawdown. But 2020 was a nasty kind of systemic correction, and 2025 was a nasty systemic correction. But it's not a bear market. It's like it's just I think the leverage on top of this has given us those like 20% taps of like high to low, but it's not entering like bear market territory. Like we've been told like, oh, 20% is bear market. Well, what does it do as soon as we hit 20%? It freaking snaps back. So it's like I think
Yeah.
that you just have leverage upon leverage upon leverage and derivatives out there that make the volatility that much greater that it's like 20% is kind of now that like it's like that potential pullback that like everyone should be happy to get. But I know it's scary. I know 20% is scary on an index, but there's just so much leverage in the market that can be utilized where you can trade a double and triple S&P. So when the markets are falling, they can fall faster. When the markets are going up, they can go up faster. And I just think these cycles are way more aggressive.
They're way
So
more aggressive. They're fast. I think yeah, they just I mean maybe we're thinking like 2012 2013 time frame for like a bear market. Maybe this is the new bear market or something. I don't know. It's
yeah,
just it moves so fast. I don't think the normal rules apply necessarily to like the future to what's going on now. Not to say again, but many an arrogant trader, investor, person has already said it's different this time. It's never different. There are patterns
yeah,
of time, right? It's
it rhymes.
never going to be different, but it is going to fundamentally it won't be different, but it may have a different veneer on the surface there. And just another weird thing, I was looking at this. So we were talking about how it's weird that like, the things that shouldn't be rallying in a really cool, great bull market, the more defensive plays shouldn't be rallying so hard. Energy again, it usually rallies right in bull markets. It's actually been pretty. I mean, at least Exxon, and Chevron have just been
Yeah.
beaten down for a while, going back to mid last year. So
Yeah, I mean, Chevron, I still just see a solid range. I mean, lows around 135 and highs around 185, and it's still just kind of hanging out at that like $20 range near the lows.
yeah,
Exxon, I think kind of the same thing. Exxon range lows around $97, range highs around 125. So we got about a $30 range on Exxon. I mean,
yeah. I
they're
mean,
decent. I mean, dividend wise, 3.67 for a range not bad. It's also, I mean, having energy in the portfolio is usually a nice diversifier over just S&P exposure. I know everyone looks at that stock right now, they're like, well, that's terrible. But if you're in some type of like Schwab dividend or some type of dividend portfolio, you're going to have some some energy, some blue chips in there.
yeah.
And I do wonder too. I mean, this whole idea of like utilities leading the way and energy and data centers and AI, blah blah blah. I still think you have to get like Chevron and Exxon and some of the big energy players behind it or else it could be like one of those um I don't know if you don't have like the real energy infrastructure behind it. I just don't know if it has the legs to like sustain these rips that we've seen like having I don't know man it's weird to just it's weird to see stocks that are up over 100% from the April lows and think that if it's not everywhere it's not the broader market, it's like you really are like very section driven and very like individual stock driven, which probably makes a stock picker's like absolute dream scenario. But over the course of 5 or 10 years, this is the hard part, Alex. How many stocks are going to make that run for the next 5 or 10 years being like the best companies to own forever. Because here's a crazy thing. This is what makes everyone feels like idiots. If you had $10,000 invested in Netflix back in 2002, it's now worth over $10 million.
Yeah.
Cool, right? Great story. But it's like, who knew it? Like, I mean,
Right.
Netflix showed up in my door with a DVD and I was really excited about it. And I bought some stock in Netflix. But I never thought for a second that I would own it for 20 some years. It's like I made a lot of money on Netflix and I took that profit. It's like it's hard to see like the Mag 7 has been, a decade worth of gains, but nobody knew they were the Mag 7 10 years ago. They
No,
were
and that's
just
it.
they were just companies.
That gets to the point we were just talking about is if you went back to the 60s, there was no Mag 7. So
Hmm.
the trends that drove your gains in the stock market were completely different from the ones that have driven most people's gains in the stock market over the past 15 years, right?
Right. Right.
So it's like, yes, the stock market, like, went up like from the 60s to now to 60s to 70s to 80s. But it didn't go like not with the Mag. The Mag 7 was a kind of a paradigm shift on new stock market gains. So that when we're saying like it all rhymes, it's all very similar, it has a different veneer on it though. It does have a
Hmm.
different veneer. It's all a little bit different. Like what's going to be the thing that's going to either, right, if we do see a correction, what does that look like? And we do see just a continued buy-in, what's that look like too? It's
Right.
hard to say. You're never going to know until hindsight, until
Yeah.
it's already emerged.
And part of me wonders, and I'm looking out bigger picture here for maybe the next 1 or 2 years. I mean, hell, maybe the next 5 years. It's like maybe this is a run until Trump's done in 2028 and his term's up, and then reality sets in after the fact. But I could see this market being so excited about growth. We're going to grow our way out of this. We're going to grow. It's like, well, we need to, or else we're going to print our way out of it, and that's going to be like a horrible thing. So I think that over the next, let's say 3 to 5 years, we get through like 2028 to 2030. We'll see what growth really looks like because I have a hard time believing that with the US 10-year at 4.36% and potentially global yields rising with bond traders saying, look, for us to own bonds, we need high risk premiums. And so if yields continue to rise, I don't know how we can grow our way out of a 10-year like risk-free, 4.5% yield or 5% yield. I don't know how we
Yeah.
can outgrow that and not have just like excessive volatility and excessive risk in the market. Um, because you're telling me like, are we going to grow at 6, 7, 8% GDP? I don't think we are. I think if we're lucky, we're going to grow at like 2 to 3%. So I mean, it's like it's a big it's like the big hope. It's like we hope we can, but I think that the real like the reality of growth, all of a sudden if we show that we're stalling or we're gonna hit short of that growth mark, then we start to just run it hot. We start to print more, we start to spend more, we start to just like melt it up more. And again, I mean, I've said this. I think that we're probably closer on our way to an asset bubble than we would be into an asset crash. I think that Trump right now, since the pivot in April, I don't think he wants to go anywhere near a crash.
No.
I think his job is look at what I did, everybody. We grew the market, the stock market's at all-time highs. You're welcome. Your 401ks can thank you. Even if we're spending more, adding more to our deficits, more to the top, less to the bottom. And then a bubble at some point ensues, and we have another 3, 4, 5 year, bear market that kicks in, and it could be horrible. Um,
I
but
really
there's
don't see anything happening until at least the midterms. Like there's so
yeah.
much the plunge protection team, as they call it, right, is very up to the task, right? They're very good at
Yeah.
it. I think that, I mean, we basically saw it. I mean, when in April, right? We had that
Yeah.
sell off and then boom, just immediately up.
Yep. And that was
So like,
the Trump put. I mean,
yeah,
nobody thought that there was going to be the put. But it's like the put was there right around 20%. So that was the Trump put because we essentially had like the bond market snap and flinch, and that caught everyone's attention. So, and I've said this before, we're kind of on this big stool. We have the bond market, we have the housing market, we have the labor market, and we have the U.S. consumer. I think that's your four-leg stool. If any one of those legs gets kicked out, obviously something can quickly teeter to the next. But right now,
yeah,
it's like the pivot hard into stabilization of the bond market. It's like that leg seems pretty sturdy. The U.S. economy is resilient enough to show that like our labor market's not crashing on us. Our consumers not crashing because we still have the top 10 and 20% demographics that are doing most of the spending. It is the I mean, like the dollar, the weaker dollar is helping global and international trade, so that's a good thing. And I don't think the tariffs are really as they're not as bad as what the optics made us believe. They've never been that bad. And so the only way that tariffs become a real problem is if we just keep throwing surprise, 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 and the market's like, stop doing that. But I don't think the market really cares that much anymore.
Yeah,
So
Ral, that was Chris's take on the tariff. I know you asked about that a second ago about tariffs. I
yeah,
don't I think it's kind of a nothing burger. I don't foresee anything drastic happening. Um, with unless I mean, there could be something like in April, something drastic happen. But at this point, yeah, like what Chris was saying at the very beginning, it's like it's the surprise factor has already run its course. Um,
yep.
and let's see what else I had on the docket for today. For this, so themes I'm watching this week. So I'm still, and I don't. Let me know what you think about this, but I was so Ethereum has just been. You do anything with ETHA that Ethereum?
Yep. I'm actually in shares of ETHA. ETHA I own. I bought it at like 1977, so I'm up almost $10 a share in the last couple weeks.
Yeah,
So
that's
I
the
had a profit target. So I'm looking at the spot price of Ethereum to go to 4,000. If we hit like 4,000 or 4050, those recent highs around 4,100.
Mhm.
To me, that's good enough, Alex. Like I'd like to say I'm going to hold Ethereum to all-time highs. Maybe I do, but if you got the charts there, I mean, a simple like five-wave move. If you compress and start from the lows in April of this year, like start at the April lows of this year, and just look at like a simple wave. It's like this would be like wave three completed, and it's run fast, but it's like this wave three completed, maybe a pause or pullback that has one more push. I mean, I'd love Ethereum to get to all-time highs. And if we get there, it's like I'm not looking to hold Ethereum. I'm not looking to be. I mean, maybe as a small allocation, but I'm definitely more of like Bitcoin believer. But Ethereum has like the network effect, which I think is why we've had this catch-up trade. But
Yeah,
it's been good, man. I mean, I went from. Let me see my positions here. So I have ETHA and right now I'm showing about, I mean, it's 12 grand in profit over the last couple of weeks. I mean, I'm up 47%. I said 50. I mean, honestly, I should probably be smart, move some stop losses. But that spot price at 4,000, I think gets tested. And if we test and exceed it, I'm going to start moving stop losses into that level. So we're close. We're close. I'm not going to say close enough yet because I still think there's some legs in this. But another like five, maybe another 5 to 6% upside. I'm going to start looking to trail some stops.
yeah. I mean, Ethereum was big years ago. It just always was sort of people thought it was really going to be kind of the next Bitcoin. It never really turned into it. It
Right.
didn't really had it came out with the same performance people were expecting of it. And frankly, I don't know, man. I don't.
It's a trade,
I
dude.
own
That's all it
Bitcoin. I
is.
own
It's a trade.
Ethereum. I don't know. I don't really know. Still, I know what Bitcoin does more than I know what Ethereum does.
Yeah. The network effect of Ethereum is like, originally when Ethereum was out, it's like, all the apps and all
Yeah,
the ICOs, it's like going to be on Ethereum, the network. It's like even that's foreign to me. I just know that you have like the kind of the safe haven and like digital asset of Bitcoin is kind of like the broader market, and then you have like the network effect of Ethereum, and then you put every other meme coin, crypto, like miner coin into the middle. It's like the spectrum is most of crypto, in my opinion, and in my world, is Bitcoin's the big one. Ethereum is kind of the network driver, and then after that, it's you're playing freaking Doge and Shibas and fart coins, and it's like that's the
yeah,
stuff that I'm never going to dabble in. But for a trade, I mean, look, why did I take Ethereum? Why did I buy shares of ETHA? Because it was an ETF. It was cheap. I measured the move out in the spot price, and rather, I mean, I could have bought calls. I mean, I had traders that followed some of my trades. They were up 150% of their call options in like 2 weeks.
yeah,
I'm up 47% in my own shares, which is great. And so if we go up and hit my technical, like it was a purely technical trade for me, Alex. And so that little that first swing pullback to around, I'm looking at the spot price you're on Ethereum. Okay, so spot price around 2118. I mean, that was a just shy of a 50% dip. And we blew through some of our like fib levels. We've blown through the extension levels and symmetry levels. So I'm saying, well, if we have a 5 wave move, then 1, 2, 3, this is like the completion of a wave three, a pause for a four, a brief pullback, would be how I'm looking for this thing to maybe have some legs up through those 4,000 level highs. If we get through 4,000, awesome. Like I'll start trailing profits. I'm not trying to be too cute on kind of calling the top here. Um, but I think a great trade of like, yeah, I've been in Ethereum for 2-3 weeks and I'm up 50%. I'm just going to take some profit. It's a good trade.
Yeah.
So
Yeah.
anyway, it worked out.
Yeah. Yeah, man. So yeah, I think with with this though, I do think it's gonna this week. I definitely want to watch the other yeah. So ETH. Well, we think ETH might go up a little bit, Omar, but we're looking at the 4,000 sort of maybe peaking. If it breaks through that, cool. But
Yeah.
maybe it won't. Maybe it'll sell off after that.
Yep.
Um. So with that ether though, I'm looking at themes this week, right? Because I think it's like what themes are going to lead. Then you go down and you nail down those. Then you go drill down farther into the stocks in those sectors, into those themes. Again with the Ethereum popping, I think crypto in general is going to be a good looks this week. We have
Hmm.
cores. I have it on the watch list. I'm not seeing anything great with that. And these are all for swing options trades. I just need to reiterate that. So we're not looking, for longish term buy and holds. Mara is interesting. Like I see if we do get over 2115. I could really see us, getting up here to 22, just a little pop, right? But again, if you're swing trading options, it's okay. You don't need too much of a pop.
Right.
So Mar Riot, um, um, that blew through today. That would have been a good trade actually. I actually had my level set, and then I didn't do this one. Oh
Wow.
man,
Riot's been pretty, that's been another big one.
yeah. Hut is a little far away. That'll have to take time to play out. Hive and then ETHA, which I also don't think. I think I kind of missed that trade, but this Hive actually is looking pretty good. So we have a little bit of a consolidation pattern, despite my horrible plotting of this line there. It is a consolidation pattern. Descending volume. We got this resistance, I think, right here breaks through there, I'm going to be watching this tomorrow probably, see if it pops. And then again, utilities. So you guys can see all the tickers here, just if you want to write them down. So cores, Mara, Riot, Hut, Hive, ETHA, and then utilities. I think is just going to keep on going, and we're already seeing that at the start of this week. Southern Company popping, CEG setting up for something that could be cool and Duke Energy also popping. These are all pretty well established multi-month resistance lines that both Duke and SO are dropping out or popping over. So I think that's gonna carry these two sectors, especially into the week, into the end of the week. Uh,
Nice.
so
I'm gonna set a take profit on ETHA at 29. Now that we talked about it, it's like I'm up 47%. I told traders day one that I took the trade. I'm looking at a 50+% winner. 47 plus is pretty good. I'd say that's close enough. I certainly don't want to see this thing dip, 5-10%. So I'm going to go ahead and set a take profit. I bought the shares at 1990 or it's 1977. I'm looking to take profit at 29, which we're trading right now at a 28.96. So hopefully this can get filled like today or tomorrow.
yeah,
And I'll just bounce out and say, hey, good trade on ETHA. I'm done, and
yeah,
move on to the next one.
yeah, yeah. I mean, that's awesome. Let's get some good
Yeah,
money there.
yeah.
So and then again, like what Chris was talking about, we got some earnings. So first off, we're heading into late July. I did have this on the deck. What is will August be amazing or will August be total agony? We kind of talked about this. Let's not spend too much time on it, but quick guess. August. We have had a great July. August going to see a little bit of a slowdown, reversal, or continuation.
I think we at least have to have a pause. Something.
Small.
We have to like some acknowledgement of like this market can't just go up for 4 straight months. I mean, a recovery off of April is one thing. April, May, June, July, I'll give it like the summer push and that
Yeah.
drift higher. But I think August, September, there's a bit of a reality check that has to come into the market. And I don't think that earnings is necessarily a bad thing because the bar has been set so low that it's like it's just easy to hit, like standard expectations. Um, but I also wonder how we can keep going higher at these clips. Like it's we're making moves where it's like call side is getting tested every month for the last 3 months. And I actually had a good lesson today. So I've revamped my entire morning sessions now. So I have a daily profit room. I probably did a little bit of a rabbit hole dive this morning. So I'll kind of simplify things for this conversation, but I want to show people that, like, look, if you go out one day or 1 week or 1 month or 1 quarter or 1 year, market makers have expected moves. And so I'll kind of I'll regurgitate some of the numbers here. If you go out 1 year from right now, Alex, and this current volatility where the VIX is around 16 to 17, you go out 1 year. Market makers are looking for a plus minus on the SPX of around 850 points. So I actually showed a trade this morning. If I did 1,000 point wide, sell the calls at 1,000 points higher, sell puts at 1,000 points lower, what does that trade look like? And I could risk about $6,900 to make $3,100 on the trade. Now, I would love to take that trade if we have the VIX spiking higher, not at 16 or 17. I'm talking like the VIX spikes to like 25 or 30. I wouldn't
Mhm.
mind taking that trade because I'm going out so far, and that VIX would be higher that I can sell like a much better expected move. But I was just trying to show from like the market essentially has built-in guardrails every single day, every single week, every single month, every single quarter. And, smart money is typically selling premium. So right
Yeah.
now it's like the VIX is just low enough that every single day it's like market grinds higher, market grinds higher. Like there's no real risk. The last risk we saw was the VIX ran from 17 to 19 and a half when Trump said he's going to fire Powell last week. That was it.
Yeah.
And that was noise. Like it
Under
pivoted the
20. It's
same
still
day.
under 20. Still
Yeah,
couldn't even hit
it
20.
pivoted hard the same day.
Yeah.
Yep. So anyway, I mean, August to me, it's like we've got to have a pullback. We got to have a
What
pause at least.
what are
I
the
think.
IV what's the IV levels for August here?
I mean, like next to nothing, dude. It's like 8-9%.
Dang. It is
It's
low.
so
It
low, dude.
is
It's
low.
so
I've
low.
never seen it that low, honestly.
Yeah.
At least nothing that I remember, I recall is it's crazy.
Yep.
Oh man. And then, but so I don't. I guess we do have big tech earnings, a lot of big earnings, not just tech, but other companies as well coming up. So what are you looking at?
Well, I think this week, the no-brainer for me this week would be here. I'll grab the screen real quick. I think my no-brainer trade this week is I'm going to price out the following. So in yellow, you can see this is like a big snapshot of some of the big notables. Um, Lockheed Martin, Coca-Cola. This is a Philip Morris International, so I play Altria with which is MO. But I want to price these out. DR Horton's a home builder. Like DR Horton and Pulte and Lennar, Toll Brothers, those are all like publicly traded builders that I'm watching pretty closely. I'm also watching builders for residential construction jobs. One of the biggest leading indicators that I've seen for recessions is when residential construction jobs start to taper off and start to decline. It's basically
Haven't those plummeted
it's been the
already?
canary in the coal mine for every recession we've had.
Haven't
I
those plummeted?
What's that?
Haven't those plummeted already? From
Not necessarily plummeted. They're starting to like peak and they're starting to trend slightly lower, but they haven't like dropped off. And I think we're still in a supply. We're in like a supply buildup where I think we're going to end up having like a supply glut. I think we'll have an
Yeah.
oversupply of houses, and interest rates will still be higher, and the average home price will still be higher, and people still can't afford like the typical rule of thumb to own a home. It's going to be too high, and I think we're going to have excessive inventory in the market over the next maybe 12 to 24 months. And so, like I said, go back to that four-leg stool. Housing market's one of them. If we have millions of homes available that nobody can afford to buy, what are you going to do with it? Is it going to be like, will the BlackRocks of the world buy it and private equity companies buy it and they just rent it out? And it's like every home we build is now for rent. Nobody owns a freaking home anymore.
I
Maybe it's
sure
like,
hope not.
I hope that's not the
Yeah.
reality of owning a home. But
Yeah.
anyway, I'm watching things like Lennar and DR Horton, Pulte, and those home builders because I want to see that stuff. The other one, I'd say
NPRs.
the big one would be Tesla. Tesla, obviously super volatile this year. Um, and probably a good one for premium selling, to be honest. If I can look at some of the key like liquidity levels, I'd probably look to see, like I own shares of Tesla, and right now we're trading at what, 310, 320. Test
328.
Okay, so we're at 328. I have calls. I have in the money calls. I've worked my cost basis down to like $220, and my calls are like 270, 280, 290. So I'm like selling in the money calls. I'm just basically putting in calls, getting into expiration, rolling it out, get an extra $2, $3, $4 of income every couple of weeks. And I'll keep doing that. So I'm at the point now where I don't have any put protection because I'm 40, 50, $60 in the money on my calls. So if I can
Yeah.
absorb, let's say Tesla disappoints the market and it drops down to 300 or 280, fine. That's essentially my call level anyway. So I'll just pull a lot of that excessive premium out and just add more covered calls at a higher clip. But if Tesla rips, I'll just keep selling calls, dude. Like at this point, the market's gone up from my break evens. I'm up like $70, $80 a share. If it goes higher, I can't really. I don't want to cut the call off and just take a loss. So what I'm doing is I'll just roll more calls, and just keep generating income. But we'll see. I think it's a good one where it's like it's super hyped. It obviously can be really volatile. Tesla out to this week. I mean, we've got a plus minus on Tesla around $22. That seems kind of low. I'm going to give you a little lesson here on. Let's go. Just go Tesla here. So expected move, plus minus 2240 from market makers. I'm looking at Tesla historically around a 12. I'm going to round this up to 13%, Alex. I'm going to say 13% move on Tesla is the average. So 13% and an underline at 328.50.
You're talking about after earnings for
So I'm
everyone, right?
talking like earnings and post earnings. We have about a $42 move based on average earnings market. So
Yeah.
I show 12.64 on my option slam subscription. I've got a lot of 10s and 11s in here, but recently 14.41, 16.25, 13.24, 12.61%. Those are big moves. Like that's going to be like a $35 to $40 move on Tesla. So right now when the market makers are only given a plus minus 22, honestly, if it was cheap enough, if I could buy, let me look at this really quickly. If I could buy, I mean, I think this is actually a pretty cheap option to trade. I don't want to risk. I don't want to risk $2,200, but the probability of this thing going out maybe a week. If Tesla went out to August 1st, is it possible that I could do a 330 by 325, maybe split this, right? I mean, I think we can get somewhere between like a $35 and $40 move. Now, I don't get like a huge reward to risk, but if I was willing to pay $28 to make 40, I mean, I can still get like a 20 to 30% take profit on that. Like that's not bad because it's to me, based on what I see on Tesla earnings, we typically see a move that's greater than what this market maker is showing, which I think is
Mhm.
interesting. So
Yeah.
to me, it's like there's a way to maybe look at some pricing inefficiency where we can take advantage of that, which would be great. So I'd love to see something like that for Tesla this week. I'll go back to the watch list
And
here.
do you usually do strangles or straddles or what for earnings? What's your
Uh,
structure?
usually, so if I see like a big level that I'm eyeballing, then I might just do a directional play and do a spread. If I want to
Okay.
trade the actual earnings itself, I typically will do. Um, but I mean, I don't like to do like long straddles, long strangles are pretty expensive. And so what I typically do is I spread those. So I'll do like an out of the money bull put spread, or I'm sorry, out of the money bull call spread, out of the money bear put spread. And so if we hit those expected moves, I can get paid roughly 50 cents on the dollar, 60 cents on the dollar. I can turn it to like a slight reward to risk that's greater. And then if I wanted to price out something where I want just sheer probabilities, like that $22 option, if I can turn that into like maybe a $3 to $5 debit to make another $3 to $5 on my reward, I think that's a
Yeah.
fair trade. So a lot of times I like
Well,
to just use spreads.
Ian here is actually asking how about Tesla. I was going to say, yeah. So if you don't want to afford, if you can't afford that, you don't want to spend that much money, like $2,000, you could do a structure or spread. Probably what, $5? What is it? What's it? What's the strikes? $2.50 width. So maybe what, $5 width? What do you think?
Yeah. Well, here's an easy way to look at it. So if I want to do let's just use the expected move, right? So I think if I did something like I think we have realistically maybe a $40 move available over the next like 11 days. I mean, Tesla earnings, by the way, I don't know if I take the trade today because Tesla's earnings Wednesday after close.
Yeah.
So I'd probably look at pricing this out on like Wednesday morning. And that way I'm kind of central or like neutral to like where price is going to move after hours and then onwards. So like Wednesday to the following Friday would be out to August 1st. It'd be like an 8-day expiration. But in those 8 days on Tesla, let me see. I'm gonna actually. Hang on. I'll come back to that in a sec. So I'm gonna go out and see what a $35 move is. So if we go 328, 328.77 plus $35. So if I did like a 360, so if I buy a 360 call, so a 360 call and then go 5 wide, it only cost me 90 cents for that debit, Alex. I can pay 90 cents to make $400 on the trade. That's a really good trade. Now, what
Yeah,
does Tesla
that's a
have to
great
do?
one.
It has to hit the expected move. So if Tesla has a big upside or a big downside, this trade actually is very cost effective because I pay next. I mean, look at that reward to risk. Like that's ridiculous.
Yeah,
So
yeah,
410 out of 90, it's like that's a 455% return on capital. That's pretty good.
yeah.
Now to
Usually your
do the
credit spreads are like, or debit spreads are like what,
Yeah,
25%?
usually it's way the opposite. So anyway, that's not bad. Now based on the current volatility, that's showing like, well, Chris, you're way above the expected move. It's true, but I'm showing that on average, Tesla has about all of 11%. To me, it's like all of 11%. So 11% times a 328.85. I mean, I think we at least see a move of like 35 to $36, dude. So if I'm going up about 30 bucks, I mean, we're at 328, I'm going up $32. I think this trade is cost effective enough that I can get this trade to pay me something. And then on the put
Yeah.
side, I'm going to do another $30, which takes me down to about 300. So if I buy the 300, sell the 295. So right here, like I can take this trade, Alex, be right on the upside or the downside and get paid $325 to lose one side, win one side, and I'm risking 175 to make 325. Like
Yep.
that to me is a cost effective way to trade Tesla. And if I lose, max risk is 175. If I win, I make more reward than risk. So that
Beautiful.
again, at a glance, this is maybe a trade that I like for my newsbreaker service, and I like it. I'll take it. But that to me is a quick way to price this in, as opposed to if I wanted to go, 330 and then sell the 360, and then do like a 325, sell the 295, something like that. Now I pay 1887 for maybe like a $30 wide move, and that's fine, but I'm still like, now my risk, I'm getting filled.
Yeah.
All right, I'm getting filled on ETHAs. I'm gonna keep closing these down for a sec, dude. Sorry. These are getting filled right now, so I'm gonna make sure I get
Nice.
my other accounts closed out real quick.
Yeah.
But real quick at a glance, Tesla is one. Where's that other? Oh, here it is. So Tesla's one. Google, another one, probably not as volatile. I think Google's way less volatile compared to Tesla. IBM might bite me a sleeper this week. IBM has had the AI play, so has Intel.
Yeah.
Chipotle, I like just selling puts on Chipotle. It's still like one of the better restaurants in the US. Um,
Yeah. In terms of
Airlines,
fast
O'Reilly.
casual, yeah.
Yep.
I don't even
So
know what it
I mean,
is.
it's crazy that going in to get like a burrito bowl with guac is $20, but people
Yeah.
still do it.
Yeah.
Um, and so you got Blackstone, you got American Airlines, Intel. So I just highlighted in yellow some stocks I'm going to be pricing out this week to see if I can find something that I like. Um, Hasbro, that's more. I was thinking that was Mattel was a play on Barbie last summer was Oppenheimer and Barbie was the
Yeah.
blockbusters. So I traded
Yeah.
Mattel during that. Hasbro is more like Transformers. I think maybe GI Joe or something like that. If they're
Hasbro's
but
been cranking too.
yeah, I know. I mean, it's like, look, there's a lot of stocks you're like, how did I not find that? You just don't. I mean, it's
Yeah.
needle in a haystack. It's so, I mean, enjoy the fact the markets are up and the indexes are up. It's like there's ways to benefit. You buy the haystack, you benefit. It may not be 100% from bottom to top, but I mean, if the S&P is reflexively bounced up 30% and the Nasdaq up 35%, it's about participating when the market is down and it's at a discount. That's when the real wealth and gains are generated, and then just having that protection to make sure you're not caught on the wrong side of something.
Yeah.
So anyway, I think it sounds like we agree, Alex, that this market's more likely to see a melt up this year than anything else. Is
Yeah.
that fair?
I really don't. I don't. Outside of some black swan that we haven't foreseen, I
Yeah,
don't see anything stopping this baby. Now when people start saying that is when you need to be cautious.
agree.
But always be there with caution, and every position you take, if you're going long into an environment like this, understand where we are and just take precautions to sort of either hedge or just don't say I wouldn't YOLO into SPX right now. Everything.
Definitely not that. That would be insane. I do want to talk about one thing, and then I'd like to transition over to some really simple like index trading that has helped me make some
Absolutely.
really steady income over the years. Let me get
Absolutely.
these closed out. So I'm looking at the bid is getting to 29, so I think I can close a lot of these out now, which is good. So I'm taking about a 47+% winner on ETHA. I'm going to close this down for my project options edge. I'll add this in to those alerts, but I'm taking a nice winner there. It's 29.002. We'll get an extra 2 cents here, Alex. There we go. Okay. And then this should be the last one.
Can you automate that across? You just do it once and it automates it. Or you have to go individually.
I'm just going, it takes me, a minute to go individual. So that way, when I
Yeah.
look at ETHA, I should look at everyone's account here. And so it would have been automated had I set the limit ahead of time, right? Then it's like
I
broker
got you.
does the work. So now my 100 to 200 shares on all these, that would have been, I think I had over 3,000 shares total. And I just closed out for over 12 grand. This trade's been open for 2 weeks in a day. That's not a bad chunk of profit.
Yeah, hell yeah.
And now I don't have to worry about Ethereum. What's it going to do? I don't care. It was a good trade. I took it. The thing ripped like crazy, and I'm taking the profit. You know what? I can look back and be like, oh, I should have, but it's like I didn't. I took the profit. It's up 48%. I'm happy. So I'll let it run. And now I still have Bitcoin. I mean, my Bitcoin exposure is still up around $75,000. So I'm still holding Bitcoin. Gold and silver still doing really well. So I've got some diversifiers in there still with that, that non-fiat Bitcoin crypto play. Um,
Yeah.
I wanted to show, so in a couple of things here, I mentioned this.
We got
Uh,
Gian, before you get into that, we got Giancarlo. He said he's up 59% on ETHA actually too.
that's
So
awesome. Yeah, it's a great trade. Um, so I like I said, I changed my entire daily schedule around, and I just want to share one of these. Like my active trading sessions are usually Mondays. So every day of the week I'm trading every Monday. Um, this is one of my favorite. If I were to have anybody come to a service of mine and learn how to trade something very basic with options and have a super high win rate with low maintenance and a passive strategy, waterfall income is one of my absolute favorites. Um, Over the last 11 years, Alex, um, the strategy that I deploy has had a 97% win rate, and it
wow.
has gone through the sideways, like 20% corrections that we saw back in 2015 and 16, the melt up in 2017, the Volmageddon event in 2018, COVID in 2020, bear market in 2022, the melt up and election stuff through 2024, even this correction in 2025, real trading. We've navigated this entire landscape with only, I think, 2 losses in 2025, and that was because we were basically hit at the bottom and we just didn't have enough time in the trade, but we took like manageable losses and we're out on top. Like somebody messaged me yesterday, like they're up, I think since they started the service with me, they're up like 15% year to date with just those trades on their account. And
That's amazing.
and again, it's like low maintenance, like literally.
97% over all
Yeah,
that time.
it's
Wow.
wildly accurate, and it is based on one of the greatest phenomenons the market's given us for the last 90 years, let alone the last 50 with options. So the nice thing is we can take a very cost-effective way to kind of dollar cost average into the indexes. So if we're interested in talking about that, I'm happy to go into more details there.
Yeah,
Um,
I want to see about this.
Okay, so to recap really
Everybody does
quickly on the
too.
on the earnings stuff, I mean, I'm going to be pricing these out for newsbreakers this week. I think Tesla is one to watch. I think Tesla, IBM, Intel are kind of on my radar. Google is a maybe. Google's been pretty resilient at like the 140, 150 at lows. I just don't know if Google's going to have much upside. I really think that Apple and Google are going to be the two laggards of the Mag 7 moving forward. I think that Meta's is on its own. Like Meta's doing great, Microsoft's
Yeah.
doing great. Nvidia is like a whole nother planet. It's literally bigger than like freaking countries and other companies combined.
Yeah.
4 trillion market cap is insane.
I
So
agree with
anyway,
you about Apple. I don't know as much. I don't have as much of an opinion on Google, but Apple, I mean, they're in a bad spot.
I mean, well, again, real quick, if Apple can get above this 200-day moving average, it doesn't look as bad. Right, like there's a potential catch-up trade in Apple, but we've got to clear this. We got to clear this sell zone. I mean, everything that crossed above the 200 moving average on the indexes are now ripping to all-time highs. Everything that crossed above from the peak in or the trough in April got above the 200-day moving average. We got back into that buy zone. It's like Apple needs to get out of its own way, and like I don't know what's going to drive it though. I don't know what Apple has on the horizon that's going to drive this thing higher to all-time highs
No,
again.
I don't.
So
I
I
don't.
think it's just going to be you buy, you hold, you sell a bunch of calls, and Apple's going to be boring. But I think that if traders really want to be careful on Apple, you don't want to see price get too much lower than 190. And if it goes to the upside, that's a pleasant surprise. But there's just so much call selling on Apple where it's like you own it. It's been a stock in the portfolio for the last decade. It's part of the FANG and the FANG Man, and now it's Mag 7. But if it gets below 190, I'd say we want to be careful on Apple. If it breaks above the 200-day, gets above like 218 to 220, maybe there's a comeback trade. But they just have to start literally jawboning AI. Everything about Apple has to be AI, and maybe the market rips with it. But other than that,
We will
no.
see.